Good day, money masters and treasure hunters. Welcome to the November 16th fantastic Friday edition of today's Closing Bell on the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom during the first hour. In fact, coming up in the next segment, David White will be joining me, so you'll have a duo team out here. And, folks, if you're not familiar with me, I kick things off for TFNN each day, 9 o'clock. You can always catch my shows either on the radio. If it's not on a radio station in your area, just simply go to your mobile device, your computer, your mobile device, tfnn.mobi. You can always catch the show. Also archived on Channel 9 out there. Just simply a whirlwind of education out there. Tom and I also do the Money Masters show from 10 to 11 each day. That show archived on Channel 10. And, folks, I absolutely treasure your presence here today. And my outcome, as always, is to help you to become a better money master and to provide you with the tools so that you can lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. This tool, you know, it's Fantastic Friday, so I call these the rules of the universe. I'm just going to give you the first 9 rules of the universe. Rule number 1, the universe says, if you don't move, I won't move. Or said another way, if you sow, you can reap. But, folks, you first must sow. Rule number 2, unless you change what you are, you will always have what it is that you have. Rule number 3, the way you do anything, this is an important rule, folks, the way you do anything is the way you do everything. Rule number 4, leaders are readers out there. What was the last book that you read? And actually, when was the last book that you read? Right now, I'm reading New Market Timing Techniques by Tom DeMark. It's a book from a while ago. It isn't what books cost, folks. It's what it will cost you if you don't read it. Rule number 5, don't say, if I could, I would. Say, if I can, I will. Rule number 6 out there, wherever you are, be there. So if you're on your way home right now from work tonight, concentrate on the way home, not the work. Rule number 7, don't set your goals too low. If you don't need much, guess what? You won't get much. You won't become much out there. Rule number 8, almost done here. Happiness is not something you postpone for the future. It's something that you design for the present, right here, right now. And rule number 9 of the universe, time is our most valuable asset. Yet we tend to waste it, kill it, and spend it rather than invest it. Not each of you out there. Thanks for investing your time with us. Let's go take a look at the markets out here. We had the Dow finished up 46 points out at 12,588. The S&P up 7 out at 1360. You have the composite up 16 points out at 2853. The small caps, Russell 2000 up 7 points out at 776. New York Stock Exchange up 0.4% up 34. The Russell 2000 being the leader on the way up. The NDX, how about this? The NDX up 10 points, closing out at 2534. The bulls were out making all kinds of signs all over the place. And the S&P 500, we're taking a look at that. If you're watching this on the screen, actually you're taking a look at the weekly chart. So this is a good chart to take a look at. When we take a look at the weekly chart, actually kind of a beautiful, the bounce is back in town. The bulls are back in town. At least they made signs today. So we're going to hand off the markets come Sunday evening to Asia pretty well. They're going to go ahead and hand it off to Germany, to England out there, just simply all of Europe. They were down hard today. The DAX was off 1 3/10%, almost down, 93 points. You had the FTSE off 72, but the bulls are back in town. If we take a look at the weekly chart here, if you were following, if you were listening on yesterday's show, we were showing you how the S&P 500 was back up against a rising price channel. It was really, the back was really up against the wall. Didn't know if it was going to go over the edge. You know, they talk about fiscal cliffs. Just take a look at the charts, because these are the only cliffs you need to be paying attention to. If you're trying to buy low and sell high, what you want is you want to find extremes. That's what we've had thus far. Is it over? No. But I will tell you that this is a rising trend line that goes all the way back into March of 2009. If we go take a look at the daily S&P 500, we'll pull that up on the screen here. What you're going to see, it created a nice bullish engulfing candle, got down intraday to a low of 1343, rejected price, got back inside the August 2nd swing point out there. We know that we had tested that in the SPYs yesterday on a little bit lighter volume. So you're back inside there. Now confirmation really comes Monday. Just building one sign doesn't do, but we do know that the S&P 500, if you're just watching us on Tiger TV, you take a look at the relative strength. It was in oversold territory. If we switch over to the ETF, go take a look at the SPY out here. You can see the SPY volume. It's option expiration Liberation Friday, so you got a lot of volume out there. 228 million shares in the SPYs at 228. Really going up against, you could say it was really going up against 173 on August the 2nd, 199 million. You had a little bull sash candle here on the SPYs. If we go take a look at the NDX, let's go take a look at the NDX. Why? Well, you had Apple. Now, you know, folks, when you take a look at the close today, up 46 points, what you really have to understand is this is a change in psychology. Last Friday, there was also a change in psychology. The markets finished just slightly up. Today, with a little bit more emphasis out there. Now, why do I say that? The prior 7 Fridays had been a down close. With all the fear out there, you know, you got all kinds of things exploding. Over in the Middle East, you got all the fiscal cliff stuff that's out there. What is going to be your tax rate come next year? All kinds of fear out there. What investors were telling you today was they were willing to go home with long positions over a weekend with just as much uncertainty today as there was yesterday. We're starting to see a shift in psychology. We certainly have the candle patterns that were out there. If we go take a look at the NDX 100, the NDX finishing up today 10 points. Let's go take a look. I can pop this up here on my screen. Where is the NDX? The NDX. There we go. The NDX 100. We take a look at that. Finishing out, creating a bullish engulfing candle today. Finishing out at 25.34.16. You can see the bulls really, the bears had it early on in the morning. Markets were down. The Dow maybe was down about 50, 60 points. Pushed all the way back up. So really about 110 point move out there. The NDX has got some work to do, but where's it going to bounce to? Most likely, first it's going to go to the gap of November the 7th out there. That high is 26.51. More likely, really, the top of the swing point from November the 6th. And most likely, what the NDX will try to do, it's going to be a bounce extraordinaire. It's going to try to get back inside the trend line that it broke. That was a long-term, well, that was a trend line going back to the October 5th time frame. I expect that is where it wants to go and be tested. If we go take a look at the Qs out here, the Qs, and then we'll go take a look at Apple. I'll show you a quick Apple chart out here. I showed it earlier this morning, but it is worthwhile to note the Qs here rejecting an important area. That is the gap up from June the 7th. The low there, 62.22, 38 million shares. You did volume today of 65 million shares, but right there, that is a little open window. That window's still open. It's a strong area of support now. It was tested back on June 28th, tested today and held. Looks like you made a bull sash candle out there. Where will the Qs run to? Most likely the top of the November 6th swing point. That's up in the 66.17 to 65.46 level. There was a hammer candle, one of Stevie's hammer candles out there. Now let's go take a look at the indexes. It was in the SOX. So it was in the semiconductor index out there. That is important because in order for these markets really to bounce, you're going to need the semiconductors to participate. You're going to need the financials, or it would be better if the financials participate. If we go take a look at the SOX here, the SOX getting down this morning to as low as 349.79, but this thing finished here. This is strong. This is a very strong bullish candle out here. It's not your type 1. It's like what I'll call a type 4 out there. Type 1 would be better, folks, but it is a type 4. It is a bullish. It is a very bullish signal out here. You can see the last time it traded down into this area was back in July of 2012, July 17th to be specific. You also had the bull step in there, and on that next trading session on the 18th, there was a big bullish engulfing candle. I suspect we'll see the same thing on Monday. If we go take a look at the bond market, let's go take a look at the bonds because everything is correlating. If you don't think that there's harmony in the markets, and if you're watching on Tiger TV, you're going to see 3 blue shaded areas. Those are 3 shaded areas of moves to the upside. They are like dead solid, equal in moves to the upside. You also see 2 yellow boxes out here, 2 yellow boxes that measure the exact same move. If we blow up the bonds out here today, you can see really for the last 5, 6 trading sessions have been moving sideways with these small bodies and these long upper and lower shadows or upper and lower wicks. That's really telling you that the market is tired. When the market is tired and you're up at highs, most likely what it's going to do, especially when you've done the same move that you have in the past, it's time to retrace it. If we go back, and I'll just simply pull this back here, I'm going to take a look at the 30-year Treasury. I'm going to pull it back to the last time that we saw candles like this. When you see candles like that, it is sending out a signal to you that a change of trend is about to happen. We saw the same thing take place all the way back in November of 2009. you see the market was moving down. You had those candles that said it was tired. The market went back up. If we go back a little bit further, up at the tops here in the bond marketplace back in December of 2008, also the market getting tired before it went ahead and moved down. Everything is in place. All we need are those bulls to show back up for work Monday morning. It is going to be Thanksgiving next week, and it's usually the bears that take the week off. 877-927-6648. We'll be right back, folks.